What's up, everybody? Brad here with the Money Dad channel. In this video, I want to talk to you about gold, the price of gold as an investment, because there are a lot of things that are affecting the price of gold right now. At least three major kind of things that are pushing that price or affecting the price I want to talk to you guys about. And we have a trade pattern, a chart pattern on the gold chart that is shaping up, and these things are kind of pushing it in the right direction to make that chart pattern kind of come to life. So I want to talk to you guys about those things and then show you the chart pattern and kind of our price target based on that pattern. So let's jump into it. We've got this article here at CNBC saying gold rises amid Russia-Ukraine crisis. So that is one thing that is pushing the price of gold up right now. Gold is seen as kind of a safe haven investment. So when people are scared, they're scared of the stock market, or they're uncertain of what is going to happen in the world. Gold is one of those things that people tend to run to or move their money into as a safe haven, right? Something that's a little bit more safe. It doesn't move around as much. It's not as volatile, and it's also just a good hedge against the dollar and other investments. So with this Russia-Ukraine crisis going on right now, it's kind of scary. People don't know what's going to happen. So it is one reason to move your money into gold, right? So you've got that going on. You also have the Fed, right? Traders brace for a tighter Federal Reserve policy, right? So the Fed has said that they're going to raise rates multiple times this year. Well, that is going to put pressure on other investments, right? So people see that, they're like, okay, well, maybe the stock market isn't going to be the best place for my money this year. I don't want to risk my money in an asset that is higher risk, right? Like stocks. So maybe gold is a better option. It might not have the upside potential of stocks, but it's a lot less risky, right? You have less reward potential and less risk. So sometimes people want to move their money into something that's less risky when they think what they're currently in, like stocks, is probably going to go down or stay flat through the year. So you got that going on as number two. And then what's the other one? Oh, inflation, right? So I don't think they talk about that in this article, but inflation is the big number three, right? We've been seeing inflation as high as like 7.5% right now in the United States, and that is just wild. So historically, a good hedge for inflation has been gold, because if you don't want your money in a currency that is high in inflation, right? So if your money is in U.S. dollars and the U.S. dollar has 7.5% inflation, that means you're losing 7.5% of your buying power every year that your money is in U.S. dollars. So you put it in gold. It tends to do a little bit better. It's not a true one-to-one kind of trade-off. It's not always perfect, but it's better historically to be in gold when you're in a high inflation type environment. So three big things going on there with the Russia-Ukraine crisis. You got the Fed raising rates, and then you also have not hyperinflation, but higher than normal inflation going on right now. So all of these things are kind of pointing towards gold raising in price right now, and over the medium to long term. So let's take a look at the chart, the stock chart of gold right now, and I've got all this stuff on this chart. I've done a lot of work here to identify this giant chart pattern that we have on gold, and I made a video about this probably about 2 months ago when I found it, and I've been kind of waiting for something to break out here, and we finally got a little breakout above this line. So let me explain to you what is going on there. Basically, these giant words right here say cup and handle pattern, and Cup and handle pattern is typically bullish. It suggests that the price of the underlying asset, in this case gold, is going to go to the upside eventually, based on some breakouts, and some things need to go right. Um, but it should break to the upside as long as a few things go right. And in this case, the thing that we've been waiting for to go right is a breakout above this line. This is the handle that's been forming. We already have this giant kind of cup-like structure right here, and this is taking place over an extreme long period of time. This is a very long-term chart pattern. You can see this cup has started back in 2011, the end of 2011. So it's been going on for, the cup formed over 9 years. I got a cup width of 9 years, cup depth of $90. This is not $90 in gold. This is actually an ETF that tracks the price of gold. So $90 on this ETF was, let's see, it went from $100 up to $190. So it was like a 90% move to the upside. So $90 doesn't sound like a lot in gold, but this is $90 of this ETF, which is actually like a 90% move. So gold nearly doubled in price from its low in 2015 to its high in 2020. So that's the kind of move that we're talking about here that kind of created this cup pattern. Well, now we have this handle forming, right? And how a cup and handle pattern works is you need a handle to form, and then you need a breakout. Typically after that breakout, you'll see it head all the way up to this next orange line right here. So we just had a little breakout right there, basically 2 days. We've been above this orange line that has been creating this handle for 2 days now. So not a ton of time above this handle, but I, as soon as I saw it, I was like, okay, I'm gonna wait one more day and just to get one more candlestick above this orange line. And as long as we stay above that orange line, I'm gonna go ahead and make this video and kind of let everybody know what's going on here. So we should start to see this kind of trickle up to this next orange line, and this next orange line up here is what I call the lid of the cup, and this is kind of our next target. This is our next price target. So I see that being on this ETF. This ETF, by the way, is GLD. It's like a stock that you can buy into if you want to invest in gold. And you don't want to go out and buy actual physical gold. So the stock ticker is GLD, and that'll get you invested in gold. So I see this stock ticker, GLD, going up to this orange line, which will put it in the $195, $196 range, which is currently at $174. So you're talking about $20 of upside on this ETF that's currently sitting at 174. So that's probably somewhere in the 10 to 12% upside range, right? Something like that, from where we're sitting at right now. So not bad, 10 to 12% in an asset class that is typically known for being super risk averse, right? Very, very solid, slow moving, safe, all of those things. So if you're going to get 10 to 12% on your money on something that you consider to be extremely safe, that's a very good investment. Now, how long is that going to take is the question. This is an extremely long period of time. It took 9 years, like I said, for this cup to form. It took, let's see, August of 2020 to February of 2022, so like a year and a half for the handle to form. So, it could take, it might take a year to get up to this lid line. So you might be talking about 10 to 12% profit potential in gold over the next year or so. Now, that said, all of these things that have been pushing gold up lately, the Russia-Ukraine crisis, that is a very short, near-term event that is highly volatile. So that could mean that we see gold move to the upside quicker than we were originally expecting, on this chart. This chart pattern is kind of suggesting, or this timeline anyway, it's kind of suggesting that it could take a year to go up 10, 12%. But we have you know, this snowball is kind of rolling a little bit faster than we were originally expecting, right? You got the Russia-Ukraine crisis, and you got inflation, and you got the Fed tightening or raising rates. All these things kind of come together, and it could suggest that we see this upside potential in gold happen a lot faster. Now, there's even more upside potential from that. If we reach this lid and break through it, then there is way more upside potential. And this is really where the cup and handle pattern really kind of makes its money. 10 to 12% over the next year, it would be great for a super risk averse asset, like I was saying before. But if you break through that orange line and then stay above it, kind of use it as a floor and continue to the upside, we could see this thing just keep climbing and climbing and climbing over the next few years. There is much more potential. It looks like I originally wrote 46% profit potential from the lid, 54% from the handle of the wedge, the handle wedge. So that's what I originally wrote down. I'll have to redo those numbers because I was guessing where we were going to break out of this handle. Now that we have a breakout, I can more accurately measure from this exact breakout point. But basically, we need to break above this lid, and that could take, like I said, a year, or it might take less time than that if the Russia-Ukraine thing really escalates things and really moves investors into gold faster. So there is potential for us to kind of butt our heads up against this orange line, then back down. That's absolutely possible. And then this would kind of be a busted chart pattern. We would consider, that to be the end of it. Or I'm not saying, gold's not going to go higher after that. I'm just saying it won't be based on this chart pattern anymore. But, once we get up to that orange line, we really want to see gold just kind of bust right through it. That would be a very good sign, and it would suggest that we're going to head much higher, potentially 46% higher from there over the next few years. So this is something that I'll be keeping an eye on. I will post updates on this channel if we have significant updates. I'm not going to post an update on gold every single day that we have one candlestick, kind of tick, a 0.1% higher or lower or whatever. But if we have significant updates here, I will absolutely update you guys on, and leave a comment down below if you are really interested in this stuff. If I see a lot of interest in this, maybe I'll do videos on this chart and on gold a little bit more often than I have been. Okay, guys, that's all I've got. Let me know what you think down in the comments below. Like I said, if you're not a subscriber yet, please hit that subscribe button. I do stuff just like this all the time on this channel: stock chart pattern analysis. I get into the stocks. I do a little bit of crypto. I'm going to do a little bit of commodities here and there as well, like gold, oil, things like that. Okay, guys, that's all I got. I'll see you in the next one.